Hello everyone and welcome to Fluent Financial's mid-year outlook for 2022. My name is Mike Lanise and I'm your portfolio manager at Fluent Financial. So the first half of the year, U.S. finished lower for a third straight quarter in the second quarter. The S&P at one point experienced a 7-week losing streak and fell the most since the height of the pandemic fears in Q1 of 2022. The first half decline was the largest since 1970. You had the Dow Jones down over 15%. You had the S&P down almost 21%, NASDAQ down almost 30%, and the Russell 2000 down just about 24%. So why is this happening? Inflation is the big drag on the economy right now. You had the May CPI numbers coming in hotter than expected, increasing 1% since the previous market, and an 8.6 year-over-year reading, which is the biggest annual increase since late 1981. Oil is also a huge problem. You had oil around $50 a barrel when the Biden administration took over, and then they started their war on fossil fuels with immediately canceling the Keystone Pipeline. Oil jumped up to $100 a barrel, and then Russia invaded Ukraine on February 24th. And since then, oil has been between $100 and $130 a barrel, as you can see here in the chart. So the Fed has a little bit of egg on its face. It said it said inflation was going to be transitory, which means temporary. And now they are seeing that inflation is not temporary. So you see on this chart here, you have the Fed estimates and the market estimates, and the Fed is raising rates accordingly. So the central bank raised rates by 0.5% in May, and then again 75 basis points or 0.75% in June, and indicated an additional 50 to 75 basis point increase in July. And again, a basis point, there are 100 basis points in every 1%. So a 25 basis point move would be 0.25%. We also saw the Fed giving additional details about removing stimulus from the market by reducing their balance sheet and taking money out of the market by starting at a $30 billion a month U.S. Treasury reduction in the markets, and then $17.5 billion a month for mortgage-backed securities. And then they will be raising those to $60 billion and $35 billion per month after the first 3 months. So that, again, will slow the economy overall, at least in theory. So tightening financial conditions drove concerns about a growth slowdown, and you have the Atlanta Fed GDP Now model estimating a negative 2.1% growth for the second quarter, and that follows a negative 1.6 print in the first quarter. So if this GDP estimate is accurate, it would be the second quarter in a row of negative GDP growth, and that would officially put us into a recession. Consumer confidence has also been hit pretty hard. You had the University of Michigan consumer sentiment hitting an all-time low with the June 24th reading of 50. What is Fluent Financial doing about this with your money? A couple things we're doing. We are holding more cash than normal. We have a plan in place for tax harvesting and some selected securities that we are interested in purchasing, but we are still waiting for a capitulation event. And we also have increased our size of our VIX calls. The VIX reading is the fear index, and typically when you have a recession, you'll see VIX spike above 40. We own the 35 calls. So if that does occur, we will not eliminate any downside paper losses, but definitely pad any losses we may experience should that aggressive spike occur in the VIX. What do we see going forward? Well, we have some headwinds with the Fed raising interest rates. We have the inflation that seems to be pretty stubborn, not transitory. Supply chain issues that will unwind over time, but it's just going to take time. And what we feel is going to be a disappointing earnings season. And so therefore we expect growth to continue to slow in the short term. Something that we are also wary of is any Chinese incursion into Taiwan. That could cause a significant spike downward in the markets, but that may not happen with the trouble Russia's been having in Ukraine. It might give China a bit of pause about being aggressive with Taiwan. So we do have some possible upside tailwinds that we could consider, And that would be if Russia just ends the invasion of Ukraine or has some sort of perceived victory and pulls out. We could also have the Biden administration do a 180 shift on its war on fossil fuels. Don't think that's going to happen, but it could. Second quarter earnings, what happens if those earnings are significantly better than the estimates? That could cause a pop in markets. And then finally, we think if you see Congress flip from Democratic to Republican control, that could change who controls the purse strings and could change some policies that are occurring. I do think there is a silver lining here, even though we think the path of least resistance is going to be to the downside, probably a recession, but I think the length and depth of any recession would be pretty minimal, pretty short-lived by the fact that we have such a strong underlying economy. We never came out of the COVID recession. We never saw that demand fully released from that, and you still have people saving a lot of money. Now, we may have people eating into their savings right now, but that demand and that underlying strength of the economy is still there. Last silver lining I would point out is that if you think back to the days of Jimmy Carter and the inflation we were having in the 70s and early 80s, what was the outcome of that? The outcome of that was 8 years of Ronald Reagan and Reaganomics. I think it is possible to see the Biden administration give us a similar type of gift going forward once we have the next election cycle. Feel free to leave comments or questions to this post. If you liked it, please click the like button, share it if you felt it was informative, subscribe to our YouTube channel, and visit fluentfinancer.com for any further information. As always, thank you very much for tuning in to the mid-year update, and have a great day.